assistance, which helps ensure growth in so many member countries and within countries. Addressing global debt vulnerabilities remains a priority for our members, especially for low-income and vulnerable countries. They welcome the progress made in debt treatments under the G20 Common Framework. They also express their commitment to addressing global debt vulnerabilities in an effective, comprehensive, and systematic manner. And members encouraged the IMF and the World Bank to help advance the implementation of the three-pillar approach to address debt service pressures. We appreciate the tremendous efforts of the members in shaping the medium-term direction of the IMF and contributing to the Dir'iyya Declaration. The Dir'iyya Declaration presents a forward-looking approach to strengthening the IMFC process and advancing governance reforms, and has received the full support from the members. Just to clarify, when I say Dir'iyya Declaration, this is the declaration that was prepared by the deputies in their meetings in Saudi Arabia earlier this month in preparation for this meeting. Here we aim to ensure that the fund remains well-equipped to meet future challenges in line with its core mandate. And before I hand over to Kristalina, I have to comment on the topic of the day, which I think a lot of people are talking about, trade tension. Many members have told me how trade situation has created significant uncertainty. Indeed, the buzzword was uncertainty all over this week. And indeed, it also carries with it market volatility, presenting real risks to the global growth and financial stability. But, as Kristalina said recently, these trade conflicts have been like a forgotten pot boiling on a stove. Well, now that pot is boiling over. In other words, we should not be surprised that there are trade tensions. And this situation is an opportunity for us all to have a constructive conversations about how we will move forward together. This is a challenging time, but I have always been optimist and absolutely make no apologies for that. And I will explain why. History tells us that the bigger the challenge, the more it requires us to come together, to convene, and to have an honest conversation. That's exactly what happened this week. And that's exactly the power of the IMF to actually be able to convene everybody around the same table in closed rooms and discuss issues in a constructive way. And I have told colleagues, I arrived in Washington a week ago with a lot of noise on my ears from reading the news and following social media. And I've told them, everyone that I met in the early days, please keep your thoughts cool. And we will see where we are going to end. And actually, today we are ending in a lot better position than when we started the week. People understand the consequences and are working together in a constructive manner to resolve tensions. I'm also confident that because of the IMF is really watching us very closely, following the global situation, and is already providing advice to its members in real time, offering an assessment of the potential impacts and the best way to proceed. This week have seen an incredible assurance confirming the position of the IMF and its convening power, and in contributing to a positive development, including in relation to Syria. Gathering together to talk about Syria and building on our meetings in Al-Ula has given us a new sense of urgency and purpose to turn a conflict-affected state, which is Syria, into a stable and economically successful one, benefiting the region and the world. It is not just about the money. It's about the work that the IMF and other partners can deliver on capacity development, quality data, and timely advice. Again, I would like to thank Kristalina and the IMF staff, and I can tell you it was an incredible, unanimous position today to thank the IMF for their incredible brain cells power, which was able really to produce a very comprehensive report about what's happening in the world in a very short period of time. And it was fantastic. So thank you, Kristalina. Thanks to all the IMF staff. And thank you again for being here. The floor is yours.
Thank you very much, Minister Aljadaan, for your kind words now, but above all, for your exemplary leadership of the IMFC. I want to tell everybody here that the way you chaired the meetings brought the members together to speak openly, frankly, and as a result to find a path to common understanding that is so necessary in the current environment, because as we all know, our meetings take place against a challenging backdrop. You have seen our World Economic Outlook. It shows that the global economy is facing a significant slowdown, and also that risks are on the downside. Understandably, ministers and governors are concerned, but at the same time, they have also exhibited a remarkably constructive spirit in these meetings, coming together, showing willingness to take on the challenges facing the global economy. Minister Aljadaan laid out the substance and achievements of our discussions. Let me add just 3 points. First, ministers and governors agreed on the importance of reducing uncertainty and working together to clarify policies. Second, very important, they recognized that they need to seize the moment to put their own houses in order. And I saw very firm resolve to tackle difficult and in many cases delayed reforms at home, to strengthen resilience, to remove impediments to productivity and lift up their medium and long-term growth prospects, and to address underlying domestic imbalances which drive external imbalances. To put it simply, addressing external imbalances starts at home. And finally, we discussed how the IMF can help countries successfully navigate this period of change and build resilience. And I was very heartened to hear from the membership strong support for our work to promote macroeconomic and financial stability, and to do it through robust bilateral, multilateral, and regional surveillance. Be there for our members when they need to cope with balance of payment problems, finance them, but also finance them with the clear objective that they can strengthen their economies. I can say the words of support for our capacity development, in other words, helping countries have strong institutions, strong policies, that support was overwhelming. at this period of complex challenges for the membership, they also gave us homework. And I want to emphasize two areas where we will further deepen our work. One, do more work on external imbalances, dig deeper when they could become a source of concern, and provide advice how to address them through policies. Two, continue to scan the financial sector to identify potential sources of instability, especially in the non-bank sector, and provide advice on how best to enhance resilience. Overall, what I can tell you is that what I heard this week was an incredible determination by our members to steer their economies through this period of change and uncertainty. And it gave me confidence that we actually can take challenge and make opportunity, that we can have a more resilient, a more balanced world economy. Like Minister Aljadaan, I started the week more anxious of our capacity as global community to come together, and I finished the week with more confidence that this is exactly what we will do.
Absolutely.
Thank you very much, Minister, Managing Director. We'll now open the floor to your questions. So please raise your hand if you have a question, and please identify yourself and your outlet. I'll start here in the middle. I'm going to go to the gentleman in the kind of white shirt. Yes, right here.
Thank you, Julie. Erwan Luca from IFP. Question is both for Minister Aljadaan and Managing Director Georgieva. You both pointed out that we ended the week in a way better position than we started it. Managing Director, during your curtain raiser speech, you also raised the hope that this week might be an opportunity for everybody to discuss. How do you feel like, could you elaborate perhaps on how this week helped dialing down the uncertainty you talked about and the global tensions when it comes to trade? Thank you very much.
The finding a path to solutions starts from looking at the problem from you seeing the problem with the same eye view. I'm sorry. Let me start this again. To resolve a problem, you have different parties. To resolve a problem, they need to have information about the problem that allows them to have a meaningful conversation. And I can say that I am very, very grateful to the staff of the IMF, because what we did was to offer the members information that allows them to see what is ahead of them and expand their horizon. If you look at a problem only from a narrow point of view, it is difficult to have a meaningful conversation to resolve it. Secondly, what I saw was a genuine openness to present views in a candid way and to listen to each other. And third, and the third is most important, it is a traction in engagement among members that could then bring a better, faster and better outcome. I don't want to sugarcoat. We still have quite a challenging time. It is challenging not just because of the tariffs and the uncertainty. It is also challenging that there are other transformational forces in play. Because of the overwhelming attention to tariffs, we stopped talking about other things like artificial intelligence, demographic transition, And I think that that sense that we can have an engagement in a comprehensive way on a complex set of challenges, that came during the meetings quite strongly. Does it mean that everybody agrees with everybody else? No. But do we have an open conversation, engaged conversation, with a fair space for everybody to present their views? Yes.
Well, thank you. And if I may, Julie, I think just to complement the managing director's views, I think overall, what do you need to resolve, conflicts like this or tensions like this? You need to make sure that you understand the parties' positions. Mm-hmm. Where are they coming from? Why they are taking these positions? And what are they seeking to achieve? And second, make sure that they actually talk.
Yes.
And that is largely what happened this week. Mm-hmm. So to have everybody and who's party to all this trade tension, which is almost everybody, all the members, around the same table in a candid discussion that is closed even. Some of it has been in the restricted sessions. Mm-hmm. To really be open and talk about what are they doing, why they are doing it, what is their view of what is going to happen in the next even short period of time is very assuring. Sharing that information is very assuring. Understanding the implications of these actions on other nations, mm-hmm. including low-income countries, emerging economies, mm-hmm. and the implications of that is actually very helpful for them to appreciate the consequences of their positions. And I can tell you, I cannot disclose some of the discussion that has taken place, but I can tell you mm-hmm. there was a very clear, frank discussion, including a projection of a timeline for a resolution of some of these issues. So that is very assuring.
Can I just add one point, that when people are in the same room, the abstract policies become more human, because then we understand these policies are affecting people, and the whole world, the people of the whole world are then present. And that makes the conversation different. No more it is an academic conversation. It is a very real life conversation.
Thank you. I'm going to go to this side. I'll go to the, let's say, second row, gentleman with the blue jacket and the glasses.
All right. Thank you so much for taking my question. I'm Ice from Bangkok. Your Excellency, you have mentioned the uncertainty around the world on your opening remark. So I want to ask specifically on the consequences for the emerging market as a whole. And what is your policy advice for the situation? And also, do you see any short-term lasting impacts to this country? Thank you.
I'll give it a try, and then you could complement. First of all, I look forward to our annual meeting in Thailand next year. And, seeing the preparation from now, I think a lot of people are excited and waiting for our meetings there. I'm sure it would be very constructive in the hospitable country of Thailand and the Kingdom of Thailand. Obviously, emerging economies, particularly emerging economies with limited fiscal space, have little room to maneuver to deal with shocks. And even if these shocks have been resolved, there are some lasting impact. So the earlier, the faster that these shocks or trade tensions in this context is resolved, the better for everybody. But we are not in a perfect world, and things may take time, and countries may get an impact, and that's where the IMF excels. I mean, that's where the IMF capacity building, advice comes to actual real play. So, you know, the managing director is here, and her staff with an incredible talent would be able actually to provide that support to emerging economies.
As a group, emerging markets, by and large, are generally highly open. They rely on, many of them rely on export as an engine for growth. They are quite active in international bond markets. So because they are highly exposed, the impact on emerging markets is quite significant. Some of the emerging markets, especially those that were in a tougher position after the multiple shocks, also face very limited and some of them non-existing policy space to act. We have downgraded growth projections for emerging markets and developing economies to 3.7% for 2025. This is a 0.6% downgrade, and to 3.9% for 2026. What does that mean? It means that some of them would see a significant slowdown in their convergence to higher income countries. And they are also seeking ways to overcome the challenges ahead. What works for them is emerging markets have been fantastic in building resilience to shocks. And when I look at the universe of emerging market economies, quite a number of countries have become more agile in their policy making, more mature in how they approach their fiscal and monetary policy. That puts them in a better position. To use an analogy, it's like they have gone through multiple periods of being tested, and they got immune to shocks to a certain degree. They would be seeing possibly somewhat less inflationary pressure. Why? Because when you are on the receiving end of tariffs, what it means is that actually domestically you don't have pressure on prices. We can expect emerging markets to look at their policy tools very carefully. We urge them be very careful with fiscal measures. Don't rush to provide fiscal support willy-nilly because you cannot afford to lose fiscal space. Have a medium long-term framework to rebuild this fiscal space. On the monetary policy side, watch pressures. We are saying inflation is likely to slow down, but watch it and watch inflation expectations. Do what is necessary given the data you have. And very important, allow exchange rate to be a shock absorber. We have the integrated policy framework that offers advice to countries how to approach exchange rate issues with great care. You're an emerging market. Actually, the minister is not saying that, but one thing emerging markets can do for themselves is get your own house in order. Pursue reforms relentlessly, because this is what makes you stronger.
Absolutely.
We have time for just one last question. So I'm going to go second row, the gentleman in the blue suit.
Thank you, Mrs. Kozak. Mr. Aljadaan, Manager Director Georgieva. I'm Philippe from Lorient Le Jour, Lebanon. My question is addressed to both of you. How will the IMF support Syria, and what role will it play in Syria, in the country's reconstruction? Thank you.
Minister Aljadaan, in the opening, recognized that Syria has returned to the international community. We had a meeting with Syrian representatives in Alula during an emerging market conference. We had a meeting on fragile conflict-affected states, and at that time, we made the first step to create a coordinating group so different institutions that can support Syria can start working together. We held a meeting here in Washington during the spring meetings. It was co-chaired by Minister Aljadaan, President Banga, and myself, with the finance minister and the central bank governor of Syria. In this meeting, we discussed how we can start rebuilding institutions and policy capacity in Syria, and how different institutions can play on their comparative advantage to help. For the funds specifically, what it means is, of course, step cautiously, but engage to first define data, what is available, how we can rebuild credible data capability. Second, central bank capacity. How can we rebuild the functioning of Syria's central bank? Third, tax policy, and how can the country rebuild capacity to create revenues for its functions. We have appointed a mission chief for Syria. We have not had Article 4 with Syria for a long, long time. And we hope that we can contribute in putting the foundation of knowledge, economic policy knowledge in Syria to get the country back on track. I mean, just imagine, they have been in a war, civil war, for 14 years. Big part of the population is not in Syria. They're in Lebanon, they're in Iraq, they're in Jordan. The fabric of the Syrian society is deeply wounded. It is going to take a lot of work by the Syrians themselves to rebuild it. And this is when international organizations can play a constructive role. Lebanon, you're not asking about Lebanon.
I had echoes that the meetings went quite well by the end, especially since the Lebanese parliament voted an amendment to the banking secrecy that is more in line with the international standards. So what are you...
So you're not asking because you know. That's very good. Very
Minister,
good.
would you like to have the last word?
Few things. I think, first of all, I really thank the IMF and the World Bank in stepping up their support to Syria and other states who are emerging from fragility. Syria in particular is a case where we have an opportunity. We have a government that is willing, and we have regional partners who are also providing support and willing really to provide whatever it takes to make sure that we bring back Syria, support its people, and make sure that we also move cautiously through that process, recognizing that obviously there are sanctions that we need to deal with and other impediments. But for even with that, I think standing with them, providing capacity support and advice, and in some regional and bilateral even financial support is very crucial. I mean, the Syrian people deserve that support, and that does not stop on Syria. I mean, we're talking about Syria as an example, but we have Yemen, we have Palestine, we have Sudan, we have other countries that really need the support, including Lebanon. And they need to know that the international community, if they put their act together, the international community will stand by them. So we'll continue that.
Africa. Well,
we are almost 5 minutes over time. So,
okay, ask your question shortly, and we will try
we'll
to
have
answer
a very brief answer.
shortly. Yes, it's my fault. I'm
Thank
the one
you.
that is professorial here.
My question is to the MD concerning the global uncertainty and trade tensions shaping sub-Saharan Africa's debt, risk, servicing cost, as well as our fiscal future, and its coordination with creditors such as you. So how is Africa also in all of these conversations? Thank you.
As Minister Aljadaan said, Africa was more present this time because we now have 3 sub-Saharan Africa representatives in the IMFC. But beyond that, very much on our minds, quite a number of the governors of the fund spoke about the importance to pay attention to countries that are particularly severely affected by this turbulence because they have high level of debt and that suppresses their ability to cope. By the way, countries with high level of debt are not just in sub-Saharan Africa, we have them all over the world. What has been done during these meetings is threefold. First, very strong emphasis on the 3-pillar approach of the IMF and the World Bank for countries that experience liquidity constraints. They're not yet facing debt sustainability problems, but they are on the way to there. And for these countries to concentrate support for domestic resource mobilization, concentrate attention to how to mobilize more international financing, and very important, concentrate on how private sector can play a bigger role in the economy. Second, for countries where debt is not sustainable, how to make debt restructuring faster and more effective. We have issued this week a playbook for debt restructuring that was the outcome of the Global Sovereign Debt Roundtable. And what it shows are the steps that need to be taken. As you recall, under the common framework, there was some confusion around how exactly to go about it, what is the timeline, what is the exact sequencing of steps. This is now being clarified. If we follow the playbook, we play by the book, we get debt restructuring in less than 12 months. And the third thing, very important for the fund, is that our members have put in place a way to expand our capacity to finance low-income countries through the Poverty Reduction and Growth Trust, so the fund can step up financing for countries so they don't need to you know, they don't need to go through a super painful adjustment because of this burden of debt. We can ease their path. But again, we want to see countries acting decisively on reforms so you know, you don't borrow your way out of debt. You grow your way out of debt. So when countries have that growth potential enhanced, then they can also reduce that vulnerability. It wasn't very short, my apologies.
Minister, would you like to add?
No, I'm fine. I think the managing director did a great job in answering. So.
Yeah, look, you have to forgive me. For 14 years, I was a professor, so it kicks in.
We enjoy it.
Thank you very much, everybody.
And this does bring us to an end, so thank you for joining us. And let me just add that the full transcript of the press briefing will be available online on the IMF website. And of course, should you have further questions, please don't hesitate to reach out to my colleagues at imfmedia.org. Thank you.
Thank you.
US companies operating in South Africa, they are big investors, but they are also investing to export to other markets on the African continent. So you have got this uncertainty of companies not knowing whether they should be investing because they do not know what is going to happen. And so that is how we saw the transmission coming through.
Dr. Rajan, is there any time that's analogous to this?
It's hard to think of one which is very similar. I think this kind of policy experimentation on such a big scale by the strongest economic power in history is, maybe Franklin Roosevelt playing with the gold market in the 1930s. And of course, there were trade shocks then also. That might have been a form of experimentation at a time when the world was on a quasi-gold standard. But I think this is really maybe early 70s, Nixon and the collapse of the